Time now to take a check of Orange County's bottom line. Joining us to talk about the state of our economy and the nation, we welcome Real Orange business anchor and Chapman professor Pete Weitzner. Hi, Pete.
How are you guys doing?
Good, good.
Fabulous. Latest gauge on the economy, to paraphrase The Who, same as the old gauge.
Yeah, you know, it's easy to think here in Orange County our economy is improving, right? The jobless rate's moving down. Our economy is pretty strong. Not as good as it's been in prior, but it's strong. Stock market's at an all-time record. We'll talk about that in a few minutes. And the real estate market's white hot. So you would think the broader economy is doing well, but it's not. Second quarter gauge of the economy, below 2%. That's small growth by any measure. And remember, it was just a couple of quarters ago we were in the negative, but 1.7%. And I guess we know what the persistent problems are. Government spending, which is not the biggest part. The consumer's still holding up their end. Government spending, of course, is down, especially on the federal side. And exports, Europe's still weak, and of course China is slowing. But I think most people would expect we'd be at about 3% given the performance of the stock and real estate markets.
So Pete, you and other market analysts as well as investors have chided Wall Street and Mark Zuckerberg over Facebook's performance. Has that come to an end, or are we still on that train?
What a difference a week makes. So they come public about 18 months ago, as Michael Douglas Gordon Gekko said, a dog with fleas ever since they went public. And then in 1 week, they've made all the deficit back from their IPO, and they're now, if you invested in Facebook, believe it or not, you could have gotten out.
Wow.
And the reason is, and this is, I think, encouraging, is they had good earnings. Their users, we know, I mean, people still use Facebook. It's over 1 billion. But their revenue was up, and the mobile revenue, which is where they claim now they have more than 1 million advertisers, and they're going to start doing some video advertising. And investors were finally rewarded. It was a rocket ship in the last week. If you had Facebook stock, if you got in last week, you made 35% on your money. And if you got in, as so many did at the IPO, and you held on, you could have gotten out, as they say. It hit 38, came back a little on this day, but Facebook stock finally took off. And some are now even saying that Google, for instance, is gotten so expensive that it's getting, now it's weird. Now people are saying, maybe it is going to be the new Google. We'll see.
Okay, so traders now bullish on Facebook. How about the overall market?
Still white hot, as I said a few months ago in reference to the real estate market. The Dow's at an all-time high. The NASDAQ is up almost 200%. Now, the Fed spoke in light of the numbers on the economy, and of course the Fed has powered this market with the low rates and the bond buying program. And if you can decipher Ben Bernanke's words, it looks like they're going to continue the bond buying program, and that essentially is saying buy stock. I'm going to boost this economy by making equities grow. So you can see all the indices in the last 4 years up anywhere between 150 and 200%.
Restaurant businesses, especially here in Southern California, it's a rough business. Lazy Dog, though, one of my favorite restaurants, has sort of bucked that trend.
Kind of knew when you went in. The first one was in Huntington Beach. There's about a dozen, mostly in Orange County. You just kind of felt that this, of course, the crowds had a lot to do with it.
Right.
This was a winner. And now they have a big private equity investor, and that always means more expansion. They have a dozen stores, 4 more just on the books in the next year, and it looks like they're going to expand well outside of Orange County. Restaurant in the blood, because Chris Sims, his dad, started Mimi's, which ironically had fallen on tough times after all these decades, and their parent company sold them for not much money at the beginning of this year. But Lazy Dog doing very well in that very tough casual mid-tier market space, and now they've got deep pockets to expand.
Good.
Okay, also expanding or returning to SoCal, the big coffee peddler Dunkin' Donuts in a big way, too.
They were here at the wrong before coffee took off.
Yeah.
Before Starbucks convinced us all not only that we had to buy coffee, but that was the meeting place, right? Dunkin' Donuts was here, and they all went out.
Yeah.
They didn't, but as you know, East Coast, Midwest, very successful, very big. Going to come back. Actually, they have an Orange County franchisee that's gone, franchisor, I should say, that's gone, not franchisee, that's what I wrote. And they're going to be the ones, so they have some company owned and some that are franchised out. And so they're going to take on not just Starbucks, of course Starbucks, McDonald's,
Yeah.
Coffee Bean, Pete's. It's a crowded space, but there's so many customers now.
Yeah, that's true. All right, not our viewers, of course, but other folks who like to channel surf may get wiped out when they come across CBS 2. We've seen commercials for this going on for the past week. What's going on?
And actually, I think they did get wiped out. Maybe it was just on the East Coast, maybe even here for a few hours, and now they have a new deadline of August 2nd. So stepping back from this latest feud, and it does seem like Time Warner is the cable company that finds itself in the middle of these. Broadcasters, especially like CBS, for years they couldn't get money from the cable companies for their rights, so they would get space, and they own, for instance, CBS owns Showtime, so they get space for their additional cable channels. Well, now they want more from the cable companies. They see what cable broadcasters like ESPN get, or CNN even, which doesn't get big ratings. So that's where the battle is. And of course, Time Warner's position is, if we give you more money, then we have to charge the customer more money. We've all seen our cable bills go up. So there's the standoff, and it could go black in the biggest markets. Time Warner's a big player in New York on the West Coast.
I hope we get it worked out.
I know.
A lot of my favorite shows are on there. A topic we'll pick up again next week, but the city of Richmond's pushing a controversial plan that its leaders say will save their city.
Yeah, this is an uneven recovery to the extent it's a recovery, right? Orange County, we're doing pretty well. Northern California, I mentioned New York, parts of the Midwest, but not places like Richmond, California. So what they want to do, rather than take over blighted properties, the time-honored definition of eminent domain, they want to take over these mortgages, buy them for a percentage on the dollar from the banks, and keep the homeowners in. It's controversial, questionably legal. We'll talk about it more next week. But it's failed in other areas. The city fathers in Richmond think this is the panacea to save their city.
Okay, we'll see more on Richmond's eminent domain plan next week. We will see you then.
You got it.
All right,
Thanks, Professor.
Pete.